and the lead managers.
Welcome back. As we wind down on this year, here's our special series. 2022 was really the year when the Nifty Bank outperformed the Nifty as three large names, SBI, ICICI Bank as well as HDFC Bank, saw a massive re-rating in their valuations. So Abhishek is here to chart up the ups and downs of the big three names in banking in the year gone by.
Bank Nifty has underperformed Nifty. However, in 2022, Bank Nifty has outperformed Nifty in a big way. So far, Bank Nifty has risen by more than 21% in 2022 compared to around 7% gains that you are seeing for Nifty. ICICI Bank has given a return of 25%, SBI about 32%, while HDFC Bank has given a return of 8.5%. Talking about HDFC Bank, first time in 3 years, in a calendar year, HDFC Bank has given a return that is higher than that of Nifty. Well, large banks have seen massive re-rating in their valuations, the likes of ICICI Bank, SBI, etc. HDFC Bank has its own woes with respect to high valuations getting corrected, which began with Mr. Puri retiring from the bank to now merger of HDFC Limited with the bank, which has not seen much enthusiasm from investors. Let's take a look as to what were the ups and downs of the big three banks in the banking sector in 2022 and what lies for them going ahead. So loan growth. Talking about loan growth, HDFC Bank, ICICI Bank and SBI have all recorded record growth rate in all quarters of 2022. Corporates have started coming back to banks as money market rates have started to heat up, even as retail and MSME portfolio have been the big drivers of incremental loan growth in the banking sector. Strong loan growth momentum has helped the banks with respect to improvement in their net interest margins as well. All the three big banks have seen their net interest margin being the highest in last 5 quarters. The key to re-rating has also been the reduction in stress assets. Talking about stress asset, restructured book, one of the most painful part of the stress assets in last 2 years has been the huge amount of restructured loans. These were loans which were impacted from the COVID wave with respect to repayments. Now, restructured book for HDFC Bank, ICICI Bank and SBI have reduced anywhere between 30 basis point to 85 basis point in the last 5 quarters. Gross NPA. The banking sector has been battling asset quality woes even before COVID impact. COVID only added fuel to the fire and led to higher stress in the system. 2022, however, has been a different story. Gross NPA ratio has declined by 12 basis points on a low base for HDFC Bank in last 5 quarters, by about 163 basis points for ICICI Bank and 138 basis points for SBI, all over the last 5 quarters, improving profitability. Thanks to strong loan growth translating into improvement in net interest margin, along with improvement in credit costs, banks have seen robust momentum in their earnings profile. Profit growth of HDFC Bank, ICICI Bank and SBI have been robust over the last few quarters and it continues to improve. Now, return on asset ratio has also improved for the banks. This can be said as one of the key reasons with respect to re-rating in the valuation multiple of these large banks. Now, ROA has improved by 14 basis points for HDFC Bank, 27 basis points for ICICI Bank and about 43 basis points for SBI over the last 5 quarters. This can be seen in valuation multiple of the banks as well, which has seen improvement in 2022.
All right, that's a great summary of the banking sector and the outperformance that it has seen in the year gone by. With that, it's a wrap on Trading Hours. Stay tuned. Halftime report is up next.